In part 3 of this special 5-part series, we take a look at making the business case for data-driven compliance by compliance professionals. I know you'll enjoy this episode. Hello, everyone. This is Tom Fox back again with Vince Walden in our continued 5-part series. Vince, today I want to visit with you with, frankly, one of my favorite topics, making the business case for data-driven compliance. What do you say? Absolutely. How does a compliance professional make the business case for data-driven compliance?
Two things, but I like to frame it as, and I'm going to give some KPIs in our discussion here, but there's two audiences. When you're a compliance professional, you're making the business case to both your risk professionals, which is, I call it the keep you out of trouble argument. It's the alignment to the DOJ's expectations or the regulator's expectations. It's avoiding risk. It's being prudent with the data. It's culture. And it's all the traditional things that we would talk about in compliance. So that's keeping the business out of trouble. But there's also an important aspect of data-driven compliance that makes the business run better. Even improved cash flow, returning money back to the balance sheet. There's that old famous statistic that the ACFE puts out that 5% of fraud is or 5% of revenue, company revenue is lost due to fraud. That's a super high number. But even if it's a 0.5% or 1%, that's still a huge number with most global and mid-sized companies. And so it's always prudent to make the business better, find hidden money. Don't we want to stop an improper payment before it gets paid rather than having to chase it and investigate it afterward? And so there's also, as a compliance professional, you also have to make the argument to the CFO or the head of operations or finance of the business. And yes, they care about, it's important that that you comply with DOJ. No one wants to get sued, but they're more interested in finding hidden money, reducing costs, eliminating waste, fraud, waste, and abuse, and stopping an improper payment before it gets paid. And so there's really cool metrics for both. And I like to appease when I talk to my clients and the companies that are interested in my software platform, I like to give them ammunition for both.
Let me see if I can rephrase this in a way that I could get you to comment on it, which is the following. I posit that more effective compliance equates to greater business efficiency, equates to more profitability, because I see compliance as the backbone of compliance as COSO-based internal controls. And what are internal controls? They're financial controls. And what do financial controls give you? They give you data. And I don't know if that's too long-winded a way to tie into what you said much more artfully, but it seems to me that compliance professionals can take this and literally sit down and have a conversation with their CFO. What I would like to ask you, and I had that introduction because, Vince, I wanted to ask you, many compliance professionals don't know how to sit down and speak CFO, speak financial language to a CFO. They can speak compliance. They may be able to speak legal. But how do you sit down with that CFO and certainly say, yes, it's going to keep us out of regulatory hot water, but make that case that you just made?
Yeah. When you think about, at the end of the day, when I can take 200,000, 300,000, 500,000 invoices that are paid out to third parties. If your company is dispersing hundreds of millions or billions of dollars in accounts payable, payments to third parties, if I can show you a way to risk score them such that of the 200,000 invoices that you paid, here are your top 10 riskiest transactions at risk for fraud, waste, and abuse, and be able to show you that for less than a $200K investment and recover potentially millions of dollars, that's not a compliance business case. That's a business or financial business case. It's a return on investment. So wait, I'm going to spend 150, 200K, and you're going to return me back potentially millions of dollars in recovery, fraud, waste, and abuse. That's a good deal. And so that's one business argument that we look at. The other thing I would encourage, though, and again, when you're talking to the CFO or finance procurement type people, again, they look at COSO's internal controls, committee of sponsoring organization, the old SOX stuff. And SOX, to be compliant, there is principle number 8 in the COSO guide that says you have to do a fraud risk assessment as part of an effective internal control. Within that, the best practices is COSO's fraud risk management guide. And most compliance professionals, or actually I can't say most because I've been in press recently. About 5 years ago, most had not read that. But more recently, many compliance professionals have read COSO's, and it's co-written by COSO and the ACFE, COSO's Fraud Risk Management Guide. That is accounting speak for how to conduct a fraud risk management program. Now, they call it a fraud risk management program, but what it really is a compliance program. But it was written by accountants, so it's not doing that. And one of the things that we've seen, and many of us have done, you've done this, Tom. In fact, you and I collaborated on this. If I look at the DOJ's 2023 guidance on the components of an effective compliance program, and I compare it to the COSO Fraud Risk Management Guide, they say the same darn thing. The principles in the COSO guide pretty much align to the DOJ, and what the meanings are basically the same. You got to have governance. You got to do a fraud risk assessment. You got to have preventive and detective controls. You got to have communication and investigations program and protocol. You got to have continuous improvement monitoring. You got to monitor your third parties. It's shocking. They say the same thing, but one was written by attorneys, DOJ. One was written by accountants. So none of the two will admit that they're the same and we should be working together. But guess what? We should be working together. And I think it's prudent for the compliance officer to take their CFO or their head of accounting or head of internal audit out to lunch and say, hey, what are you doing? Because we should be doing the same thing, or we can be collaborating together. So that's my soapbox, Tom.
Let me ask you to stay on that soapbox because I think it's an important conversation to have, Vince. Let's start with a compliance professional. When you sit down across the table from a CEO or a compliance professional, do they understand that it's not simply, as much as lawyers want to say it's about staying in compliance with regulatory frameworks, it's really about running a business and making money, and that they're going to have something that's a business efficient tool. So that's part one of the conversation. Do we as CCOs understand that now?
Yeah, more and more, yes. I've seen, and you know who you are in there. If I ask you, what is your company's accounting system? What's your ERP system? And if you don't know, then you are behind. You are not plugged into your business. You could be the best compliance officer with the best policies in the world, and I'd be scared for your job because you're not relevant. And I don't want to say that over blanketly, but that's dangerous because you don't have data-driven metrics. And I'll tell you, most CEOs nowadays, if you don't have data to back up what you're saying or what you're asserting, you're in trouble. And so that's, I would say, and I should probably tone that down a little bit because of course you're relevant, but it's dangerous. I was in a scenario once where I heard a compliance officer, we were saying, what's your risk assessment? Because that's what we start with. Where are your risks? Oh, we have risks in our sales commissions in Africa. I'm worried about that. We have no view in there. We can't get that data. I'm like, we can get it from the financial data. Oh no, that data is impossible to get. You can't possibly get sales data around commissions out of our Africa location. And I'm like, I'm sorry, you're an SEC registrant and you do collect sales. I know you do. No, we can't get that data. Of course you can get that data. Otherwise you wouldn't have your auditors wouldn't sign their audit opinion. Of course you have that data. You just don't know where to ask or how to ask because you need to learn how to think about it. And I'm seeing that less and less. Compliance officers are now more sophisticated, but it's not frustrating, but it's so important that compliance professionals understand that there are transactions happening in their business that poses risks that need to be monitored, that they need to have transparency into. Otherwise, they'll find themselves not being as relevant. When they stay in the compliance space of just policies and enforcement, you'll find that you're not being invited to meetings. Another case I have, and I'll make this quick, another company, a very large company, the company was doing a transformation of their third-party onboarding platform. And of course, it involved their ERP system, right? So they better know that they were deploying Coupa, which is a big financial contract management third-party onboarding system. None of the questions on that Coupa due diligence, procurement created all the questions. So how long you been in business? What's your credit rating? What's your liquidity, etc. There were no questions around, are you government official? What's your risk around compliance, etc. But finance didn't even bother to invite compliance to the party because they didn't even think that they would be relevant to third-party risk. And it's just like, what? Compliance wasn't even invited to the party, wasn't invited to the meetings. And then that's a scenario where compliance is too busy doing their little thing and not being a part of the business. And so that's an example of, hey, compliance needs to be in those meetings.
Now let me turn to your profession, finance, CFO, perhaps internal audit. When you sit down with them, do they understand the need to have compliance, at least at the table?
Yes, more and more. It delights me. And again, I see more sophisticated companies, and of course, the more regulated companies in telecommunications, oil and gas, technology, and of course, pharma is pretty mature by now, especially. They are compliance and internal audit are integrated well. Compliance and often finance and procurement are integrated well. And there's been a vast improvement in the discussion around data. And yes, I think it's definitely changing.
Vince, would you be able to sit down with a CEO and help them craft an argument or a discussion to go to the CFO? Could you coach them on how to speak CFO speak so they could sit down and have a conversation with their CFO that's not complianceese or legalese? Is that something that you've either done or you could help someone do?
Yeah, yes, I've done that. And again, I've given up I was a consultant and a fraud investigator, a white collar crimes investigator and forensic technologist for 25 years in the Big Four. And I've since given that up to run a software company that automates most of that work around data management. But in every time I talk to one of my software customers, it is a CFO conversation. The buyer is compliance and head of compliance, but you have to get procurement and finance approval, and they want their business case along with it. And it's not just the keep you out of trouble argument, it's the having the business transparency into risks and being able to monitor for anomalies, for whether it's anomalous commissions in the sales process or conflicts of interest in the vendor process or segregation of duties or bribes, kickbacks, sensitive keywords in the payments that go to third parties. Everyone can agree that it's not good to pay an improper payment. And if you can stop it before it gets paid, even better. And so those are relatively easy questions to have, but you just got to know your audience. You don't want to talk, you don't necessarily want to talk as much DOJ and risk requirements to a CFO. They're more interested in how is it going to save the company money or how is it going to improve efficiencies.
Vince, unfortunately, we are near the end of our time for this episode, but before we leave, I wanted to ask you if our listeners wanted more information on any of the tools we've talked about, but equally important, if they wanted information on maybe how to be counseled to make this argument to a CFO, what would be the best way for them to get in contact with you?
It's funny. I'm currently writing an article in Fraud Magazine on this topic, especially as we're coming to the end of the year in 2023. People are going to be looking at their goals in 2024, and they're going to be asked, so what did you do in 2023? Did you make your goals? And I'm writing an article on how to demonstrate ROI and success of your compliance and fraud risk management program. So I'm excited to read that article. It's going to be out in November. But I would love to talk to companies. I have some really good probing questions. I have some very good models and KPIs that I would like to that I'm happy to share. Dollar recoveries, risks avoided, etc. Prioritizing those high risk vendors and what did you do with them? There's some good KPIs both for compliance professionals and for the CFO. And again, you can't ignore IT as well as that because they're the gatekeepers of the data most often. Feel free to reach out to me and visit my website at KonaAI.com or just shoot me an email at vwalden@KonaAI.com. I would be happy to chat.
Vince, I wanted to thank you again for taking the time to visit with me, and I look forward to continuing our conversation. This is Tom Fox again. Thank you so much for listening to this episode. I hope you'll join us again tomorrow, where we take a look at the question of what data to ask for and how to ask for it. This special 5-part podcast series on data-driven compliance is a production of the Compliance Podcast Network.